Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
And I think that a lot of these markets, hey, the baby might be thrown out with the bathwater. Good afternoon. I'm Phil Strebel, Chief Market Strategist at Blue Line Futures. So one of the clients actually just asked, are we having a rough day? I would say that it's less than desirable. It's not as bad as the Duke and Duke Commodity Brothers after that orange juice report came out, and that thing went, what, limit down? So if you look at the markets across the board here, sea of red everywhere, and the driving factor, and we talked about this, two different things here. So a lot of times the technical chart patterns, oftentimes they do front run these types of developments in the markets. 172,000 jobs created, only 85,000 expected, even the back months being revised higher. What it does is it allows the Federal Reserve to adjust their bias to more of a hiking type of environment as you get out into the year. So what happens is markets across the board, they have to reprice for these types of things. So the dollar index breaks out to the upside. You get the gold market breaking below some key levels here, breaking below the 200-day moving average. Then you've got that sell-off that's going on across the AI space here, across momentum, losing some of that upward momentum. And people start to question this AI picture again, the data center build out, the demand for copper that's out there, the supplies that are above ground being outstripped because of this constant supply and demand issue with the build out there. If you do get some of the tightening taking place in the AI, maybe some consolidation, maybe some concerns and less build out taking place, you have some of those supply pressures come off in the copper market. So copper coming off quite a bit here, down about 25 cents as it is recording. You've got the gold market coming off down about $138. Then you get the silver market getting a bit of a 1-2 punch, dropping below the 70 mark. Now, one thing I'll do look at here is the gold silver ratio popping up to 62-1. That's been in those kind of mid to high 50s for a while, and it tells you the risk off versus risk on environment. If we were at 52, 53, 54, well, silver would be far outpacing the gold market to the upside. Now we've got it outpacing to the downside. And then again, you've got that gold and silver really selling off. And I think that a lot of these markets, hey, the baby might be thrown out with the bathwater.